Morning traders, welcome to the Traders Lab. Can I get an audio and screen check, please? Thank you. All right, good morning, everyone. Quite an active day today. A lot of structured trades in the Trader Lab. I want to get into it right away. As you guys know, we gapped higher, and that, of course, sets up some interesting things to look at. Uh, those of you who've been following the Trader Lab, and if you are aware, what the Trader Lab is really about integrating Bookmap order flow tools with auction market theory, that is participant behavior or the behavior of the shoppers, and integrating this with the volume profile. It is not indicator based, it is specifically participant based. And the idea behind the Trader Lab is to help traders understand market mechanics, how the market works, why it tends to do some of the things it does, and at times be able to get in alignment with it, and then based on individual traders working with ideas that are shared in the Trader Lab, develop a business in trading. The business of trading is very similar to how casinos operate. It is a statistical business, and many of us think it's indicator based and the line crosses this or that, and that's all fine, except if you're not getting the results you want, it might be because you're using a process that does not have a statistical edge. The casinos only play games that have an edge. They don't play games where they lose dollars over time, and they don't make it up as they go, and they don't change it. These are things that, based on our emotional wiring, is not something we're very good at. And even the idea of even knowing whether or not we have a profitable process is something most retail traders never get around to figuring out. And the reason they can't figure it out, and I'm not saying some don't, the reason that most retail traders fail is because they're using a defective process, but they never know it's defective. It's random, so they think it's just fixing it or adjusting it versus not understanding that by its own nature it might be defective. And of course, past performance is not indicative of future results. Everybody is different. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. In fact, go grab a pen and a piece of paper. As always, I'm going to give you a little overview, some statistics, so you kind of get a sense of the potential. And remember, if we're looking to extract statistical edge, we want to use whatever we can that might give us that edge or help us extract the edge. So I'm going to share that with you. And this is part of what we do in the Trader Lab. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As you know, this is not a trade calling room. This is about helping you understand how the market works, and that's based on participant behavior without any indicators. And of course, like everything, the outcome of anything is random, and anything you see here, or anywhere else, you need to vet and see if it might align with you, your approach, your psychology, etc. And the Trader Lab is really based on a group of like-minded traders looking to leverage their collective experience and to create and vet a potential long-term understanding of the business side of trading, potentially participating in it as a business, and turning it into something more than just a passing experience. And again, your mileage may vary. And this is also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. And you can all visit the Trader Lab chat if you choose to download 60 PDFs of these structured trades that you can review and reverse engineer. And also, there's a library of webinars that may help you see what's going on and where this all comes from. Now, first of all, right up here is called the naked volume point of control. It was 4370 quarter. This is a high volume area, and auction market theory is simple. It's shopping. So all this stuff of theory and profiles and oh my goodness, I think I landed on Mars. Don't worry about it. It's not complicated. We expect things to be complex. And also, so we think it's complex, and we even think trading is complex. I'm going to suggest it's the exact opposite. And we go down these paths of complexity looking for the needle in the haystack when maybe simplicity is what allows us to see what's right in front of us. Maybe. And again, everybody is different. Everyone has their own truth or beliefs. One of the issues is, of course, we all believe things, but what happens if what we believe is not true? But we want it to be true. So maybe we want trading to be complex in the sense we need it to be complex so we can continue looking for what others don't see. Is it possible everyone has looked where you've looked or are looking already? So naked volume point of controls, like when you go shopping and there's a high volume area. In other words, in our case, traders interacted, buyers and sellers interact. And when you go to the store and there's retail, and I always go over this high level overview, just so you know, you buy something at a retail price, buyers and sellers agree on the price. If the price is too high, things have changed, and you come back to a former retail price, and the market has a tendency to come back and check these things, and it's too high, the market's going to leave it. This happens in all fractals and time frames. So even in a little thing like this, it's an auction. Too low, too high, retail. If this price is too low, we can leave it, check the price in this microstructure, leave it, check the price in this structure, leave it, check the price in this structure. Now I'm in a scalpel with the electron microscope, but what I want to show you is this is the whole, all the volume from the last time we were up here for the whole day of RTH. This is happening right in here over just a couple minutes, and it could actually happen over a couple seconds, and we can read it. This is language. So anyway, let me show you some more levels, and grab your pen and paper. I'm going to give you a few statistics. Okay, the overnight volume point of control, which is this is the highest. Think about this. Last time we were up here, highest volume, retail. The ETH, highest volume, which is the most recent auction, and that's what's going on. In the store, it's an auction. If the price goes on sale, it goes down. Let's say the product was worth $1 retail and it goes to 75 cents, you buy two. If you come to buy two, they're not going to keep the price on sale. It's temporary. And then the seller, not the buyers, the sellers will raise the price back to retail. If the sellers think they can get more, they will raise the price higher, and the volume will taper off because less buyers are going to pay $1.50 for a dollar product. If the sellers want to sell the product, they're going to have to lower the price to get the buyers. And this is what creates rotations, and this is what creates consolidations. This is a consolidation. This is a consolidation. You know what breakouts are, right? What is it tends to happen in consolidations? You come back and check them. And why are they too low? Because in this behavior, it was too low. You can't buy an S&P there in the microstructure. Well, this, if we come back to a previous high volume area, if it turns out to be too high, the buyers may go, you know, it was worth such and this price back last time we were up here, but right now, nah, you can keep it. I'll see you later. Is everybody tracking? So let's come back to some statistics. 79% probability of overnight volume point of control. 76% probability the ETH high. And all these you have to vet for yourself. A 68% probability we take out the first hour high, which is that. Remember, these are just statistics. 63% probability we get to the previous high. 62% probability we get to the overnight mid, wherever that went. There's yesterday's high. Let me just see if I can find the, I don't know where it is. Overnight mid. Value area high is another target. 43%, they start going down. Okay. And we have, well, there's previous point of control, 31%. Let's start with that. Okay. Is everybody tracking? And by the way, if you're in YouTube, thanks for visiting. By the way, there was some technical difficulties this morning. If you're in Discord and things go south of the border, uh, there should be the link in here for YouTube, and you should be able to get into the stream just in case. Let me just make sure everything's percolating. Okay, so let's go. We're going to start where I always start. That's the RTH open. Now we're opening in a gap, and this is yesterday's high. So potentially we have the possibility, if this is too high and this is too high, and I'm going to show you the first trades, that if we reject this, I'm not paying that. Are you crazy? We can come down. Now, there's going to be a couple other things. I have to mark this on this chart. This is called a low volume node in the ETH, and it was around 61. Let's just call it 61.5. And let me explain what this is very briefly so you know why it's important. We just mark it in here. You know, if I don't do this, I forget. So I always mark, you'll see me as we go along here, I mark stuff. And it's part of a narrative. In other words, I narrate the market, and it's conditional narration. When I wrote trading systems, they were conditional. If this, then that. So it was a condition. Well, it's the same thing. Remember I said a consolidation, there's too high, too low, and retail. This is retail in this consolidation. It also happens to be the highest volume for the ETH session. So I'm going to show you a process. Here's the thing. If this is, when we were down here, it was a consolidation, right? Too low. Oh, it's on sale. High volume, retail. And then out here, I'm not paying that. And it rotates. What happens in these consolidations or rotations, and I think of them as fractals because it's all multiple time frame. Write this down, Russian dolls. You know how it is, big doll, and then you go down in size, right, to the little doll, the little doll, but the behavior's generic. It's the same way in the market. All fractals. I don't use time because it's trying to fit the market into something fixed. And the participant behavior is not controlled by the clock. It's controlled by where they discover a price, and either they accept it or reject it, whatever they do with it. So in this time frame or fractal, this was too low. So out here, too low, too high, rotation, and it's buyers and sellers interacting. When you come out from one of these, who's ever wrong is offsides, they become buyers. You know, buy stops, right? And then we start this whole thing in a new area. What's too low, what's too high. This is a dividing line between the shorts that got squeezed, that created this buying part of it, and the longs that are in this leg. Is everybody tracking? Just give me a yes, give me a no, give me, I don't know, and ask a question. Trader 2004, you need to be posting in the Trader Lab. TB2 is just a streaming thing. Nobody monitors. Yeah. Okay. Is everybody yes? Is that a yes? Okay. Good morning. Okay. Let's continue. This is what's called a low volume node, and it happened in the ETH. And the reason this is important is what's under this edge. Longs. Where's their stops? Under here. Okay, now you know. So now I'm going to go into the RTH open, and I take time to do this because this is all happening before the RTH opens. This level's on my chart. It was here. Actually, I think I spoke about it yesterday, the day before. It's an outside target. I can't remember because I don't remember anything. But these are all levels. Let's see what else is on the chart. Well, yesterday's close. And this was retail yesterday. This is a potential target also, not a recommendation. Remember, I don't know. And then we have this down here. Again, clueless, not important. My job is not to predict. My job is to try to get an alignment, and then using a vetted, structured plan, And all these are available to you in the Bookmap Discord Trader Lab chat to attempt to underline with quotation marks to get in aligned. Okay, let's take a look right here. Now, I'm going to show you, well, the structured trades, but I want to integrate order flow, iceberg behavior. This is the iceberg detector. For me, it's a very important tool in Bookmap, uh, and it stops an iceberg. So these are buy stops, icebergs. This is the order flow. It's called a heat map, and we can see the change in the liquidity. Darker means more. If it lightens up, it means they're pulling and they're, whatever they're doing. Sell stops, buy icebergs. Now you know. The yellow line is called the developing volume point of control. Think of it like a retail price. This is the same thing, but it was left behind the last time we were up here. In the RTH session, as the volume moves around and as they auction, this yellow line moves with the volume. So this is called developing point of control. This is called a naked volume point of control. And naked means it hasn't been tested. So this is the last time we were up here, it was the highest volume. So now we're checking it. So and here's how I think of this. This is shopping. And we left it last time we were here. If we leave it, what that is saying is, and now we come back and we check it, it's too high. Now remember that concept, too high. Watch what happens here. The same process. So let's watch. Market opens. Oh, this is wonderful. Hold on a second. Gotta just move this down so we can see this clearly. Now I'm going to show you micro. And remember, what I'm sharing with you are ideas based on your experience being an astute shopper. So there's no magic here. It's common sense, it's logic, and if you've ever shopped for anything in your life, you already understand this. You've probably just never have thought about this is how trading works at times. Everything is random, right? So this is the developing volume point of control. This is the ETH high. Remember, we had a high probability. I see the liquidity in the order book. I see some buy stops coming out. Okay, but I see the liquidity and I see sell icebergs. Now, all of this on its own is a suspect, and I don't know. I always say I'm clueless, and I can prove it. I certainly am. And the term clueless means I don't predict. My mind is open, and I have levels that I understand what created them. And I understand that in a gap like this, and write this down, guys, and this is something I always say, and if you've been following the stream, you already know this. The market goes up to go down, and the market goes down to go up. And I know it's such great insight. Why does it work that way? Because if there's longs, if the market gaps higher, it goes up. Why might it go down? Well, we don't know what it's going to do, but let me give you a hint. If you were long from the last couple days, I'm just saying, and we had an excess a couple days ago, right? And you're playing the long side. And of course, as day traders, we get long, we get short, whatever it is we do, subject to our plan. But you get a huge outsized gap on a Friday, right? Let's put it together. What might you do? Would you buy it? Or if you're holding a position, might you sell it? And what is that called? Write this down. It's called responsive selling. Responsive. You are responding. Now, anything can happen. But what we anticipate if we get a structured trade is selling, and that means short. Now, it can do anything, trading. That's why you have a trade plan, risk management, and vetted structured trades. And in the Trader Lab, this is about anticipating, not impulsing, not making it up. Remember how casinos work. They play structured, vetted games in a random environment like we are, and they play the games exactly the same way, and they take losses like we do. How do they see their losses? is a personal failure or is overhead and cost of production. If you're in the business of trading, you know that there's a statistical probability of something happening and it's random. The casinos are random the same way. The cards come out of the deck randomly and the gamblers play the cards randomly. Do you really think our business is any different? Let's look. Now, the yellow line is called developing volume point of control. All it's doing is measuring volume. Right here is the RTH open. So you get a little blip, and you see the yellow line. It is measuring the volume, and it's very sensitive. More volume is here than there was over here. So you'll see how it moved up. I'm just showing you. Now, so this is, well, at the moment, too low. This is now retail. And what is this? Oh, it's on sale. I'm not paying that. Yeah, but it's a great price. Yeah, but and this yellow line is retail. If this is too low, we get buyers. That means at the moment in a microstructure, and I'm taking you down to electron microscope, and I'm not asking you to think, can I do that? No, I'm asking you to follow the story. Can you read it? Now, what I'm going to show you and I'm demonstrating to you is what we do in the Trader Lab. But not only that, this works for swing trading, day trading, ticket. Doesn't matter. This is what the Russian doll is all about. It's generic. The market moves higher. Now, I took out this, which is my retail price. And remember, write this down, horseshoes and hand grenades. There's nothing, overnight high probability. Let's watch. And this is now retail in this microstructure right here. And I don't know what's going to happen. Remember, I'm clueless. I can prove it. I know this is in the book, and I'm seeing the icebergs, and and I don't know. Because here's what can happen. Too low, buyer. I get this here. It can push off, which would be the same as this, too low. What do I see? Seller. And I'm going, that's interesting. This, and here's micro volume, retail. Think of this like a little store. Consolidations or shopping experiences. This could be your convenience store. And either the price is too low in your convenience store, and if you want to buy an S&P, you're going to have to pay higher. Or the shoppers are going to say, I'm not paying that. It's too high. And they leave the store. Simple, isn't it? There's your volume. So right here is too high. Now, I don't know. So let's watch. Seller. Don't you wish? Well, let's watch. Pullback. So what I have here is potentially a short. And I also have this is too high and this is retail. Now let's just watch it. So let's label this. I call it a variable high volume note. Now, if you're very skilled, and I'm not saying anybody should do this, you would know because you practice this and you have unconscious competence, and this is what it takes, you would know this is too high. Where's the short? It is either here, stop above here. It is here, stop has to be above there, or here. Why? Let's consider. Too high in the microstructure. There's another piece here I want to show you. There, let me show you one other thing, then I'll move right along. By the way, I just see over here that we hit our next target down there, 37.5, right? Before we ever got there. This is how the auction works if you've been keeping an eye on it. Hold on. But I want to show you something else. Remember, we have the Globex, wherever the heck it is down there, 60 something. Right here, sellers, buyers. Let's watch. Statistics. I'm showing you delta. This is the delta. This is the aggressor. So if I have I'm just adding a little piece in here. I normally don't have time for this, but I want to show you something. So I have a target, and I have my buyers. All right. So this is the RTH open. And I'm going, oh, this is great. But the longs in this leg, they are basically here. So we had sellers here. They got taken out. Thanks for playing. And now I have my buyers. Okay. And I'm thinking what? Responsive selling. So I have buyers. They're in here. And of course, they're in here, but they're mostly up here. Okay. These guys who sold here, they're getting squeezed. So that's kind of how this starts to work. I have my liquidity. So now I'm putting pieces together. Notice this drops down. This is my microstructure too high. I'm going back into it, but I want you to see why delta is usable. So now I have my selling volume here. My buyers are above me. That's what you're looking at over here. And I'm only looking at, this is called the chart volume profile. It's only showing me what's from RTH open here, right here. This is also from the RTH open. It's going to show me everything as it comes in. And I'm going to be able to look at volume and outside edges of consolidations. And this is the delta. This is only going to show me what's on the chart. And this is the session delta, which right now they're both the same, but as the day fills in, I'll be able to see all of this and then isolate legs and everything else to see just inside these rotations with the delta. I just wanted to point that out. So, too high, break. This is retail. Is this too low? And we're going to come up. This is the question. Or if that's too high and the volume is here and the longs are stuck in this leg, are we going to come down and take these guys out? That's what the delta helps you with. And now I know, I see. So this is right where pretty much the buyers are, okay? So right under here is where, right, and we have sellers. Let's watch. These guys are now under the bus, and now this is too high. And this is where the buyers are trapped here, and they are now the stops. They're the fuel. So this is a Trader Lab short. That's a Trader Lab short. If you're proficient, pull back to the mid and VWAP is a Trader Lab short. And look what's going on with the book. And there's nothing under us. And all you see is sellers. And the only way these guys get jammed is if we come back. So that's your first trade. Now, let's see, let's watch. So this is too high. Now I'm back in the game with you, okay? So this is the VWAP. This is another structured trade in the Trader Lab. It's a short. It's called the VWAP to VPOC. Here's how it works. This is retail, right? Because of the volume. The market is running away. And remember, we were saying, what did we anticipate? If this is too high, and has a high stat, then south of the border. Then what? There's about this target, which you'll notice we had a reaction. I'm going to bring it back in case you're late stopping in today. 79% probability we're going to get here. If you took a short, this might be an area you scale. Why? It was the retail price in the ETH. Notice the behavior. We come back to mid and VWAP. Up to you. If that's one of your vetted trades, it is a potential short. Where to? Scale here, hold. There's more. Now, if it's not, you're just hanging out. Next structured trade is this. The volume point of control or retail now shifts down here. That means, and let me interpret it for you, this is too high. I'm not paying that. That's why we left. I'm out of here. We checked the retail price in the ETH. What about this? Is this too low? That's why you got this. Maybe. And I say maybe because I could only know that it's a level of behavior, and that's why this. Now, the possibility is the following, and I'm always thinking in conditional statements. So if this is too high, then that. That's my test. Why? Because it was maybe too low. So if this was retail, just like this was too high, is it possible This retail price, overnight volume point of control, it's just the last ETH auction, is too low. If it's too low, we can come back, check this, or come back and just check this. And again, I don't know. But what did I say at the top of the stream? Friday, gap, what's possible? Responsive selling. Do I want to get long or get short? Me? Short so far, with exceptions. And I'll show you the exceptions because there's longs also. So right here, we chop. That means, and there's more volume here in this structure than there is up here. It's like, think of it like we're not shopping here anymore. I'm shopping here because that price is too high. So now retail moves down here because there's more volume. And this shift is called VPOC migration. There's two potential structured trades in the Trader Lab. One is we break low, we sell it, and we continue. That's one. The other one is we break high, we pull back, and it's either, and I'm going to tell you for me what it is, and you'll see this structure, you're going to appreciate this. Now I'm going to tell you there's two trades here. One is counter trend, and one is get out of Dodge and look for a continuation trade short. This is where trade plan comes in. Let's look. This is and I want to call it a long. Let me put it this way. This is a structured long. Now, structured doesn't mean mechanical. It means you have to align it with the context. This is a long to here. And maybe there or wherever, right? Let's look at alignment. Overnight volume point of control. Is it a coincidence since we broke under this retail price from the ETH? See how we tested it? We came back, we broke below. Let's stay with the story. It's a beautiful thing, at least to me. It's almost a symphony of trading. It's music, and I think of it as language. It's speaking. I'm not paying that. Well, this right here was retail and ETH. Let's check it. Oh, it's too low. Back here. No, it's too high. Responsive selling. Let's break down. This now is retail. Oh, yeah? We break high. That sets up a long. Where do we come back to check? Here. Nope, it's still too high. And what else? VWAP. Now we have another structured trade in the Trader Lab. It's called VWAP to VPOC. Here's what you have. This tells you it's a long, or it's not. It's a counter rotation. This is a structured trade called VWAP to VPOC. And look at the alignment. Overnight, ETH, VPOC, fractals. Are you guys tracking? I get chills when I look at this because to me, it's clear. Is it clear to you? Is that a yes? Is that a no? I don't know. If you have any questions, by the way, post them. In YouTube, there's a little bit of a delay. By the way, if you're finding this interesting and you're in YouTube, how about a thumb up? Also, I want to mention there's a library of PDFs that you can download in the Bookmap Discord Trader Lab chat, about 60 of them, and I'll show them towards the end of the stream so you can kind of see what it is, circle arrows, all that kind of stuff. And there's a library of webinars that I've done so you get a high-level overview of this process. And also, there are webinars I've done with 4 hours of live narration. But to me, you know, if you don't understand why, what's the point? So I do this, and if I get into real time, then we do it. So let's watch. Now remember, this is an outside edge down here. If by the way, if you're in the Trader Lab and you don't have to be a Bookmap subscriber or anything, this was our outside edge of this consolidation, right? Outside edge. What's at the outside edge of consolidations? This is from the ETH stops. So if I get down here, a couple possibilities. I can check it, revert, or go through it and then accelerate. And I have no clue. Not my job. So this is a long to here, or if you're anticipating south of the border and a gap fill, it's only a short. This is subject to context. This is something else that's covered in the Trader Lab. So let's watch. So this is called VWAP to VPOC, and then you would hold. This is the next target, and you manage the trade, and that's another piece. And remember, in the Trader Lab, this is all about trade plans, context, and alignment. So right here, so this was a trade to here, down to here. Now we come back to mid and VWAP. Now, where was it too high last time? Here. Microstructure. Out here. Out here. Now, what you see developing here, so that's too high. We ran away. Now I'm going to show you this. Now we don't know where the outside edge is. This is changing into another context inside a context. So let's think maybe, underline maybe, that we have a possibility to come and fill the gap, right, which is here. Who knows? And this is an outside edge from the ETH. So I know stops are going to be potentially under here. This was the target before we ever got here. Can you see the methodology? And this is all based on participant behavior. It's not based on anything more than that. I certainly don't predict anything because I'm more clueless than most. And the reason I'm clueless is I have no expectations or ability to predict. All I can do is look at participant behavior that they said as shoppers what they thought was too low. And I know there's going to be stops under here. So if I come down this distribution, and this was created in the ETH, I know this is an outside edge. So a scale or a target is out here. So that's why this. And now you get that. Is everybody tracking? Can you see before we got here and everything else, the why you might be targeting that? So important. Are you guys tracking? A lot of minutia, I understand, and I apologize. I hope you get something out of this. This is no indicators. And the reason I don't use indicators is I did. And I've been trading 43 years. I grew up on them when they were first coming into the retail space. I went beyond indicators to trading systems and design, and I know what optimization is. And I have another term for optimization. Let's translate that. Curve fitting. I worked with neural networks when they first came into the retail space. And I'm not saying anything more than been there, done that, and it didn't work for me. And most retail traders attempt to do this using canned, out of the box, plug and play indicators. And then they tune them, right? They tweak them. And I was constantly doing the same thing you guys do. What I found was it didn't work, except it was random. And I didn't understand how I never thought about gaming theory. Nobody ever talked to me about it. There were no or very few off floor traders. I never knew any of them. It was all floor traders when I started. So I had no reference point, you know. I just didn't get it because I didn't understand that I was using random inputs in a random environment and you can't measure it. So how do you extract an edge? The casinos only play games with an edge. They play them the same way. With multiple indicators, multiple time frames, you have random inputs. So you're the gambler, unfortunately. And you don't know it, in my opinion. Again, it's just my opinion, my experience. I'm not saying it's yours. I can only tell you about me. So too high, and what's the outside edge here? So all of this behavior, short, 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 is going here. And then what? Now, if this is the outside edge here, then where's the outside edge here? This is where the thrill. But let's go to microstructure. This is the last area we had an auction. And I'm not saying anything more than this was too high. Let's see what happens. And again, let's look again at the delta. Let me just make sure. Okay. So sellers are trapped under here. Longs are up above here. outside edge up here is we have our sellers here and we have our buyers in here, right? So these guys, you know, right here, it's these sellers. So the sellers and the buyers. So these guys are praying and these guys are holding the shorts. So if we can come out into them and that'll be buy stops. But where did the buyers fail? It was here. So let's watch and see what it does. Too high, price check. Too high, potential short, pull back. And you see what I'm using? I'm using this. What is it? If you're here for the top of the stream, shopping. I'm a shopper, aren't you? Don't we love to shop? What was too high? Right in this microstructure. Remember, Russian dolls. This is a consolidation. And in this structure is volume. It was too high. They left the store. Where is my location? Right against the volume there, and just happens to have alignment with the mid. Huh. Well, now let's say you're looking at this, but you think they're going to take the stops out. 71 buy stops. I'm going to show you something else. As long as we're here, you don't mind, I hope. The green bubbles are by delta, and that means aggressor. Who are aggressors? Buyers, and buy stops become market orders. They create delta because that they're crossing over, right? What do we have here? I come to the mid. I've got the buy stops coming out. I got selling icebergs, and of course, I don't know. And what do I see here? Only 3 buy stops. Only 3. This is my indicator experience. Oh, divergence. Huh. Less of something, higher price, right? Now, again, it's either a short here or, let me show you, or not, or what do I have here? Too high, alignment, divergence, chop, retail against microstructure, too high. This is auction market theory. I'm a shopper. We're all shoppers for S&Ps. Here's my micro volume. I'm looking for it to break and then a test. So my test is here. If you understand this and are very fluent in this language, or you're waiting for, quote, more information. Seller. So, seller, 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 volume, seller, volume, seller, volume, test, seller, test. Okay, everybody tracking. Are you guys with me? And again, I'm only in here 10 minutes and I'm only trying to show you how this works. And this, I guess I'm teaching. I don't know. But let's watch. So let's move on. So these are all opportunities. And wait a minute. Where am I trying to go? I don't even know where I'm trying to go. I'm trying to go, of course, and fill the gap. That's possible. And anything can happen at any time. Now, if you look at the delta, there's sellers all here, right? So we had our buyers trapped here, and those become sellers. We had our initial target here, which was this thing. So we scale in front of it. So this was the short, the short, the short, down to here, right? That was our first structured trade. Pullback to volume, seller. Notice the liquidity. Iceberg buying, sell stops. Thanks for playing. Retracement. Back to where? Here's another possibility, another potential short. You know, it's up to your trade plan. Now, let's watch. Remember, this was too high. right? You do remember. I know you made note of this. And why did I record it? Let's just look. What is this? I'm not paying that. Get out of here. I'm leaving. Magic? No. Auction. Auction. The market. How does it work? Not indicators. Indicators are translators of participant behavior. That's really what they are, right? And that's what you use them for. I get it. What am I doing that's different? I don't have any indicators. I'm just using the participant behavior. And I can be right here, right now, to participate based on my understanding of how the market works. And if you're here from the beginning of the stream, you know what this is. It was too high last time we were here. And you know this was too high when we opened in the RTH. And what does the market do in all fractals and time frames? It checks prices. I'm not paying that. And then in the open in the RTH, I'm not paying that. And they left the store. Now it's on sale. We don't know, by the way. It's lucky, aren't we? And we're still going for the gap fill. And what do? The market is short, right? If the market is short, these guys, who's vulnerable? They are. And it doesn't have to do this, you know. This is the joy of trading. Who knows? So what do? You trade your trades and you have a trade management process that you've vetted that over a random distribution of interactions with the participants helps you maximize your net or edge. And it's random. It's completely random. And write that down. If you're in the business of predicting, open up a fortune telling store because there's no way to predict participant behavior. What you can, though, do is understand what creates the behavior and where participants said a price was unfair, which was right there, which is why I marked it. And that's right at the RTH open. I come back and check, and I don't know. So let's look. Let's look inside. Let's go to microstructure. This is my location. So I got liquidity. I see the sell icebergs going off. You notice the icebergs. Why are they selling? Huh. Buy stops going off. What do I see here? Let's just look. 69 buy stops. You're going to see something familiar. 58 buy stops. And I don't have a structure yet. 10 in this. Sell icebergs. So I got selling from these guys. I got the liquidity sitting here, and I'm like a deer in the headlights because I understand how the market works at times, remember, randomly, this might mean we're checking this price just like we do in all fractals and time frames. This is too high. I see a seller and I'm going, is this it? Because that's what I go through. I see this, only 6. Less. There's my buyer, but there's my sellers. There's my sellers. So this is a suspect right here. In this fractal, there's my high volume. So this high volume is retail in this store. In the previous area, this was too high. That was too high. Now I'm in this fractal. What's it going to do? Take this out? No, it's too high. So now I have these multiple layers, thinking Russian doll, too high. Okay, it's either a short here, wherever, or there. These are shorts, stop up here. This is a Trader Lab structured trade. Break below, pullback. This is an add or nothing. What do I know? This is too high. What do I know about this? Let's look. Too high, retail. So this is fractal. So what I'm doing is it's Russian dolls. So this was too high. That was too high. That is too high. This is too high. There's my seller. I can sell this against this. This was too low. There was my buyer. The old concept, support, resistance. This is support. It's on sale. Boom. Now it's, I'm not paying that. Bing. Where do we come? Here. It either is going to bounce back here or break below. If it breaks below, this volume is too high. That volume, which was support, look at the volume here, you can see it, now is resistance. Seller, see you later. Now what? This is now the next fractal of developing time frame. Highest volume for the day so far. When you break below, you come back. If it's too high in this fractal, it's a short. Where was it and where do you have to protect? Above the last location, it was too high and rejected, which is here. Another short in the trader lab if it's part of your plan or not. Yesterday's high filled the gap. There's more. Are you guys with me? I have another statistic, by the way, and it's called, there's actually a couple, but I'm going to give you the next one. Very interesting. At 9:30 Central Time, my time, there's something called the IB stat, or initial balance, and that's something from market profile days. When I first learned about this was in 1985 from Peter Stottlemyre, who created market profile. He actually taught it to me. And I'm going to tell you, I messed it up. I said, hey, I'm going to use indicators. I'll show you how to do this better. I'm going to say no, not so much. And anyway, first hour low. And let me go back to statistics here for you guys. And we have a structured trade in the Trader Lab for this. Let me see if I can find it. About a 55% probability. But remember, it's Friday and we're anticipating something called responsive selling, right? Context supersedes statistics, but they give you a gauge. And it's really, I think, putting all the things that you have vetted together to help you have a statistical edge. Remember the casinos. It's all random. Well, we're in a casino. It's just which side of the table are we going to sit on? With the gamblers? Or do we want to be the house? I think the house, but that's just me. So let's watch. So at 9:30, whatever the low is at 9:30, and you see IBL, that becomes a target to come out. The value area high and the overnight mid are also targets. That here, just write these down if you missed all this. And again, it's just random. Value area high is about 43% probability. I know, pretty exciting. And the previous point of control, which is also a target down below, is about a 31% probability. And you're going, why should I care about that? The overnight mid is 62% probability. There. So these are targets. Now this one is higher than that one. Isn't that interesting? So I'm going to look at this one. So let's watch. I come outside. Now I'm looking for this. By the way, notice the iceberg. 659 sell stops. And what do we see? Buy icebergs, sell stops, lower price, less stops. Isn't that stop divergence? Now again, I have no idea. I just see this stuff and I go, oh, that's interesting. So let's watch. Now, what we're looking for, and this is a structured trade in the Bookmap Discord Trader Lab chat, and you'll see that these are all things, ideas you can reverse engineer and see if you can get them to fit and align with you psychologically. And I know the temptation is to use your indicators, but what I found is the indicators create conflict and inconsistency, and then you're just gambling. And if your equity, the thing that's so hard, and it was hard for me, was early on, I had winning trades, losing trades, winning trades, losing trades. Well, gamblers have winning hands, losing hands, winning. I thought I just had to adjust it somehow with either more indicators, tuning, all that kind of stuff. You know what I'm talking about. More time frames, more moving at something, oscillate, pick it. And now I'd be more consistent. But I had an inconsistent process, so I was always a gambler. I just didn't know it. I thought it was doing more. So the liquidity comes in the order book. Where are the sellers? They're in this leg. Okay. So the shorts are in this leg. So we can come back and mean revert. Now, I don't know. Now, this is a potential long. Let me show it to you, but it's not a structured trade. This is something that if you were more advanced in this process, but I want you to see it because what I'm showing you is how to read the market. This is what's my indicator? Participant behavior. So right here, we're coming down and it looks like the end of the world. I have targets below, right? Now I'm already inside yesterday's range, right? So I filled the gap. So, but right here, I don't know. I see stop divergence, lower price. I see microstructure. There's the volume. This is a store, and I have no clue. Remember, and keep going. What do I see? Big buying. Oh, is that a change in behavior? Where's the buyers? I don't see really any buyers until here. Okay. What does that say? Let's go into fractals. Maybe, underline, because nobody knows, that volume in this store is too low. If I leave it, look at what I'm going to do. What was too low? This volume. I come back to check it, right? Here, order flow comes in. There's a buyer, microstructure. There's a pullback, and it's not a structured trade, it's behavior. Now let's go back to the other side. It was too high here. That's where my seller was. So here you have possibilities. You have I'm just showing you minutia, not actionable. I want you to see consistent behavior. Now, the other piece of this is you only interact at locations. You don't act in the middle of nowhere. But what you can do is you can see this, how it works. So this was too high based on these guys saying I'm not paying that. Down here, it was too low based on these guys, you see, the buyers. If I come back here and it's still, and I don't know, this could be a short and off we go, or this can be a long and off we go. It's either, and then you got to clear this, you see. Where are the stops? Here, here. Where are the stops? Under here. So let's look. Stops are here. And this is now, and if this in the developing time frame is retail, and we know there's stops admitted in the VWAP, and there's stops over these swings, right? So let's just see what it does. Stops. And this is retail. So in a fractal, I mean, this is kind of amazing, isn't it? In the microstructure, this is retail. In this microstructure, I'm not paying that. In this microstructure, this is retail. That's too low. So where is retail now in the next higher time frame? And where are the buy stops? Here, and then this is retail. So we're shopping. Where do we come? Watch. We come above here. We break below. This shifts up. Is this now the new price? Are we going to push off? No, we push the other way. Too high. This is a short. Now, in the Trader Lab, this is like a running, I mean, this is something where you have to have experience. It's not easy. The liquidity comes in the book, right? We have our, you'll find this interesting again. So watch this. Buy stops, sell icebergs. These guys drop in. That's like a hand, and we don't know what they're going to do, right? Clueless. This is now retail. Is it too high or what? Don't know. Let's look left, by the way. You always got to look left. Let's just look left. I want to take you back here because I'm not operating in a vacuum. Right here, I didn't label it. Oops, sorry. Now let me show you. This is, I made a boo-boo. Boo-boo is error. You got kids running around the house. You get into boo. Variable high volume node. Let's do this. Now you'll see why. This, in this fractal or time frame, was too high. This became retail. Okay? So, getting back, this was too high. Okay? So let's watch. Now I come back. Where do I come? Here. Price check against this volume. Too high. Now, right here is a short. Now, I can't, for me, I see this. By the time I recognize it, I'm just going to be getting in here. My stop's going to be above the liquidity. This is an ignition algo. It's chasing it down. Pressure. Watch. Liquidity, see how it disrupts? Let's watch. And we have targets down below. So I want to just show you the IB, right? So I'm looking for, I missed that. So this is the part that's too low just before, oh, I think I got confused where I am. Let me just get back here. Okay, this is the first hour low. I want to show you the long. At 9:30, we have, now none of this I was just showing you. Some of it are structured trades. This is not a structured trade. It is, if you understand how the market works, you would understand this and you would go long. If you're in the trader lab, depending on your skill, and this is, I've been doing this a while, you might say. So I understand what this is. And I understand this is the mean. This is called mean reversion. It's outside in trading. And it happens because we squeeze out everybody. And then what you're looking to do is continuation trades. But I'm going to show you now the IB. So if you got short here, your target is going to be this and below. And again, we don't know. So because we have now stops under here from these buyers in this leg. See this? So let's watch. We come down, we take these guys out. IB. Now we have two possibilities. One is called the IB continuation trade, which is a pullback and then a short, or mean reversion. And by the way, this is our next target down here. So we heading towards value area high, which is this for a target. Now, the IBF is a mean reversion trade. And you got to decide whether or not you want to only take shorts or whether you want to take a long into a short. And let me explain the IBF. It's mean reversion, which means the goal of the trade is come back to the mean. And here's the targets for it. I don't know if they'll be at the time. I just have to. I'm going to explain something to you. Here's the targets for this. Now, the targets are the following: VWAP, mid, VPOC, and developing value area high. And the VPOC, which is this, volume point of control, and the developing value area high, I believe, were at the same place at the time. And somebody might confirm that because this is current. So let's see what happens. So this is a long. Let me show it to you or not. Now I was going to explain how do you, this is a structured trade in the trader lab, and you guys can reverse engineer these, and they, like every trade, it might work, it might not work. You'll take a stop, you won't take a stop. It's like, give me, it's random. So write that down. Trading is random, but it's about statistical edge over a sample size of interactions. Do you win more than you lose? Do you collect dollars or give them away? That's trading. Nothing more than that, other than how we feel about it and all the things we do. So we come down outside. Right here, I'm looking at this, and I'm thinking, and this is what goes through my head. And I have a location here, a target, and I have a high probability here. So, but I have my structured trade called the IB failure. And what it is mean reversion. Remember, and where's the stops? Here, here, here. Mean reversion sets up two things. One is the retracement back. The other part of it is continuation. So you've got two uses for this. One is the long, or get out of Dodge and look for the short. Up to you in your trade plan and your understanding of market mechanics. So let's take a look and see what happens here. Buyer, right here, microstructure. This tells me in this little microstructure, which is here, and all the sellers are in here. This is the delta, right? So everybody's short. Everybody's short, at least down here. So these guys sold in the hole. So that becomes my fuel. In other words, the buyers are the buy stops, buy stops, buy icebergs, okay? Buy icebergs, sell stops. So this is the longs getting taken out. So now all these shorts, all this selling, now I'm looking for, okay? Now you understand. So this is too low. There's my buyer, and I'm clueless. I am the clueless. I pull back here. I'm in this outside edge. This is absorption detector. There is absorption here. See it, okay? Anyway, buyer, liquidity in order flow comes in, buy icebergs, long. Now let's just watch. And remember, I take stops, everybody does. Buy stops are up here, right? So target, next target is here, and then there's an outside edge, which was right here. This is the trade is done here. Now, like I said, there's two ways to use it. Mean reversion or get out of Dodge. And this is just a structured trade. It's available in those PDFs. And then since the final target was here, remember, this is the mean. That's what's mean reversion. Now, this is really tough because of the speed. Right here, what do we have here? Let's look. Do you see something? Do you see something? Do you see something in the microstructure? 543 sell icebergs, 40 sell icebergs, buy stops, volume, micro, alignment, and like I said, it's either a mean reversion back here or it's a setup for a continuation trade back to the IB low, which it was wherever it is. I think it's covered up, but back to that yellow IB and then continuation on to our statistics. And what was my initial target below? You do remember this, right? Can you see how the market works? No indicator. What's my indicator? What's the purpose of the market? Let's go back to the whole reason we even have one. The reason we have a market, it's trying to figure out a fair price. It's going to check pricing. It's going to go, nah, that's still too high. It's going to do it in all time frames and fractals. Oh, no, I'm not paying that. Yeah, but this was fair yesterday. Oh, well, let's check that. Nah. And it's either going to be fair or unfair, too low, I mean, or this one's too high. And in between, it's all the same. Huh. Anyway, so the short is there. The target is here. Now I will look at your questions. I hope you're getting something out of this. And I'll also get into real time and see what we got here. Outside edge is up here. Liquidity is here. This is a distribution. Remember I showed you in the ETH, too high, too low. Now remember, you got target. If we come outside, this is also mean reversion. This is called outside in trading. It's rotational trade. Stops are going to be out here, which I think we already picked off. So this is not fair. I like to do it in real time, but this is my outside edge. And it's called mean reversion. If you're in the Trader Lab, you'd already know. Now, whether or not you can execute or you want to, it's up to you. What was too high? Here, seller, there's my resistance. And this move here, this rip, creates something called low volume. And low volume means it was an auction. This is an auction. Now, too low, too high, too low. Retail. I'm out of here. Boom. We're not paying that. So we have the possibility, like we do in all these structures, to come back and check it. And when we run away from a price like this is called, it creates low volume. It's not auctioned. And then the market consolidates and does its thing. We come out here, chop, and there's a seller again. Now the high volume is there, but my outside edge is up here. The market has a tendency to come out, take these stops, and if it's now too high after the weak hands are out, we can revert, and it's called mean reversion. What I was doing on the long from that IB, which I still forgot where it is, was mean reversion back here. So if we come outside to a low volume zone, it is the same process from out here, potentially, or out here, back here. So we're going to watch this. And mean reversion is my least favorite trade because you're trying to pick an outside edge and there's stops there. So it's very easy to get fooled. In other words, it comes out here. Do you sell this against this? Well, you could. But you also run, it's just choppy. What you're in is rotational trading. So the key to trading something like this is now you are looking outside, and let's look here. And then I'm going to look at your questions. I apologize. This right here is too high. But I can also come outside and squeeze up into here. So think of it this way. That's too high, but there's stops. In this little microstructure, that's retail, and out here is too high. If this is now retail, this is too low, and maybe this is too high, I can still pop through, so I can be leaning towards this and out here. So in this area. So if I'm going to get, and I'm only going to get short, doesn't mean the market won't go up. So let's look. See, I don't know. There's my high volume, which is aligned with this high volume that was rejected that we just came back to. There's my seller. I'm not paying that. So anyway, we'll watch, okay? And where do we come? You see what this is? This is now rotational trading. This is called mean reversion. And what I find hard about it, and then I'll get to your questions. Please be patient. Now, this is a flat. And the reason that we have problems, at least I do with this, is that stops accumulate on both sides of these outside edges. Now, I only want to be a seller. Why? We're rejecting all these prices, and we fell out of that distribution here, and this is my outside edge. What I don't know is where. Now, value area high, overnight mid, all this is potential areas to be looking for the short. And here's your liquidity. So I have confluence, and this is how order flow helps. These guys are hanging out. Here's the selling icebergs, selling icebergs, selling icebergs. I got confluence. What I don't know, because nobody knows, is how far up into this low volume zone might I come. And we could also, remember, this is trading. We could just blow out of here and come all the way back up above. I mean, the joy of trading, right? Oh, here we are. So so anyway, that's what this is. Now you have to decide if your skills or you have an edge in this context. This is called context. So that's a short, and I don't call trades, but I'm more interested not trying to impress you that I actually know something. I'm really more interested in you seeing something, and can you relate to it? And does it make sense to you? That's my objective. That's why I started trading. And it was so that retail traders can maybe understand how the market works, because we think the market works because of indicators. That is not what the market is. It's not an indicator business. It's actually a participant-based business. And the function of the market is to try to figure out, what is this thing worth? What are we willing to pay for it? Why? And all that. And where do we find potential excess price? And think of this like shopping. Oh, it's on sale. Oh, I'm not paying that. And here, we reject. Here, let me just show you in the profile just kind of what we're seeing. This is a consolidation. Outside edge, too high, too low. Retail, which we sold, right? So if that's too high, and then I fall out and I start a new consolidation, this is my outside edge. This is all too high. Now it can change. So if I think this is too high because the participant says we're not shopping there, and now we leave the whole thing, now I have a new consolidation developing. It's rotating. Well, when I come outside, I want to sell it to come back here. And then whatever, trade management, or I'm holding for lower targets, which might be there or not. Nobody knows. Is that logical? And I appreciate your patience. I'm going to look at your questions. Thanks. Hi, RP. Thanks for the question. RP is asking about overbought, oversold. I don't know what overbought and oversold is. Relative to what, you see? That's the thing. Overbought and oversold to me doesn't mean anything, because it's overbought, oversold is what? Divergence? Too high? What's too high? What's too low? I can't tell. My indicator is random. What is overbought? this is, because the price is too high. That's overbought, unfair price. Out here, what's overbought? Is it there? Is it there? Is it going to be out here? That's what we're trying to answer, right? But the problem, RP, is that that's random. The thing is, and this is the point of the Trader Lab, if I strip all the indicators away, I don't use any. I mean, I do look at delta, but all it's measuring is what I can see right here. It's just easier. But if I look at delta, but basically, overbought, oversold, stochastics, oscillators, RSIs, they're all derivatives of moving averages. They're all the same. Keltner channels, derivative of a moving average with an envelope around it. They're all the same. And the problem, at least for me, and I only talk about me. The problem is they're random. Well, I don't want randomness. This is random. I want consistent application of process so I can measure it. Otherwise, I'm just gambling. I could go to casino and get the coupon to the buffet and some cocktails, and then I know I'm sitting on which side of the table. I want to be the house. I want to trade with an edge. I want to be in a business. I don't want to be a gambler. There's a big difference between the house and the gamblers. The gamblers make it up. They're all random. Now, the cards coming out of the deck in the casino are also random. So that creates the random environment, which is what we're in. The difference is if I have structured trades where I apply a consistent process, not sometimes this and sometimes that and a little of this, I'm not making a stew. I want minimum inputs. Why would I be short? You see, what does my indicator tell me? Should I have gotten long here or should I have been getting short here? Do I know why I want to only be on shorts? Do I know why this was a target coming down? My indicator doesn't tell me that. Do I know if we fall out of this distribution, as we fell out of this one, too high, I want to be selling this outside edge for continuation trades to here and maybe lower. I don't know. I can't know anything. What I know is potential, and I know if I have a vetted trade plan that, like the casinos, I only play games, and let's think of setups as games, just for a comparison. They only play the games that have a statistical edge. They don't know the outcome of any individual hand, just like nobody knows the outcome of any specific trade, but they only play the games with the edge because over time they extract the dollars from the gamblers. Well, retail traders are really gamblers. I don't want to be a gambler. I want to be the house. And by having statistics, it gives me the courage because I know I have a probability of one outcome happening over the other, even though it's random. I can change my mindset from being struck, let's just say, triggered emotionally by fear, greed, and inconsistency to seeing where my edge is, when it shows up, and what my metrics are for just doing the same process on a consistent basis. Like the casinos play the games exactly the same way. They don't make them up. They don't change them. They don't change the number of cards that are dealt in blackjack. They don't do anything differently. Even if somebody walks out with a suitcase with 100,000 in cash, next hand is dealt exactly the same way. In the trading business, if you want to sit on the house side of the table, that's how you get potentially to it. Past performance is not indicative of future results, but this is why the Trader Lab exists. Because most retail traders never, I think, and it's just a personal opinion, don't have a chance. Because they think the answer lies in a toolbox of indicators that are backwards looking. Indicators have no idea why the market is going down today. If you understood market mechanics, you would know the potential, not what it will do, what it might do. And then you'd anticipate it. And if you see it, you'd already have a vetted structured trade to participate. And then, like everything else, the outcome is random. Anyway, overbought, oversold. That's kind of a long answer, but the basis of everything is understanding that this is not based on indicators. It is based on participant behavior. And an indicator is an attempt to translate that behavior. Well, what I found is the indicators cannot be there's no way an indicator And for me, even the trading systems that I built would understand why the market's going down. They would hope to get aligned with the market. And if they saw something like this, the system might go long or whatever. I don't know. But I'm just saying is, if you're in a rotational market, which is now we're in rotational trading, that's not the same as getting on the bullet train. How would a system know the potential underlined to get long here to here and to get short from here? How would a system or an indicator know that this was the outside edge for a short? I don't think that works. I'll put it this way. If it works, somebody ought to call me because it didn't work for me. And I am telling you, I spent years thinking that it was just a turn of the screw or an adjustment or a time frame or this or that I mean, we all do. And the thing I didn't understand is I was using random inputs in a random environment. And randomness times randomness equals chaos. Nothing. Garbage. But I spent years thinking the answer was in the adjustment of those tools, tuning, tweaking, adjusting. It's no different than somebody who moves a trend line. It's all the same. Oh, it'll fit better this way. That's called fitting, curve fitting. It's all the same. And it doesn't work. 1100 sell stops. Thanks for playing. We have another target here, not a recommendation. And this is just algorithmic behavior. It's a bracketing out. So anyway, neither here nor there. Any questions again? Sorry. Hope I answered that for you. So here's the thing. There's not a right way or wrong way to trade, guys. I mean, I get asked all the time, and I'm going to say, can you measure it? Here's why. If the casinos play a game, they measure it, and they see it loses. They don't play it. Now, early on, and I mean early on, those of you who know me, I shared an office with George Lane. He created stochastics. It was one of the early oscillators. I thought the Holy Grail showed up. I mean, really. I said, oh, this is great because it would cross over. It would, and you'd look at it in hindsight and yeah, it would cross over this, that, and the other. So I applied oscillators to many different things, not price only, but volume. Volume, advancing volume, declining volume. I had 32 markets I was watching. I wrote systems and I traded across many asset classes. And I always ended up in the same place. It would work, it wouldn't work. It was inconsistent. The equity would go up, the equity would go down. I'd then re-optimize, do walk forward testing, and on and on and on. And I kept coming back to the same place. And I just thought it was adjustment. I got into a routine where it was part of my thing. Well, every 2 weeks I go back and, boom, boom, boom. And I thought you'd keep up with it that way. I was always behind the market. I was never in real time because I was adjusting what I was doing to something that isn't current. And I was not in alignment with what was happening now. I was in alignment with what happened a couple weeks ago. A lot of good that does me. The other thing is, when we use indicators, we're trying to fit the market into a box when the market is dynamic and ever changing. If you understand how the market works, you would understand why this was a short up here. The indicator, not so much. Maybe, Anyway, this is one way to do it. And I always think about this like, if you're waking up in the same place, working hard, and you're getting the same outcome, even though as gamblers we have winnings and losing, where is your edge? Do you even have an edge? I call that trader groundhog day when you're continually chasing yesterday when we are trading today. And if you are interested in learning more about how the market works, auction market theory, why the market exists, what is its function, how might you get aligned with it? There's the 60 PDFs you can download and you can reverse engineer. Also, if you're in the Trader Lab, not only is there a library of webinars, and I suggest if you visit the Trader Lab, you download these PDFs so you can take a look at this stuff. And I'm not a vendor. You don't have to be a Bookmap subscriber. You won't be solicited. The Trader Lab is a group of like-minded traders who've done everything you've done. I mean, the collective you. We've all done the same stuff. The question becomes, if you're waking up in the same place, maybe it's not you, maybe it's the process. And the problem we have is if we're in a random environment with a random process, we're going to and not understand that the process might be defective. You're going to be continually doing the same thing. And if you're getting the same outcome, you might want to think of doing something else if that interests you. And the Trader Lab, this community, we've all done the same thing. So, and the thing is, this may not be for you, any of us, because this is another way to experience the business of trading. But if you've been doing something and it doesn't work, I think, if you can't get a yield out of your effort, get something from your experience. What do you know? If you're doing the same thing and it doesn't work, you might want to look into something else. It was very hard for me to let go of all the work and years I spent with indicators, trading systems. I'm not talking months, I'm talking years. And how do you let go of something that you've invested so much of yourself into? You have a belief that it'll work, it's just getting it right. Well, maybe you can't get it right because it's defective. That's hard to deal with, I will tell you. So, anyway, these are all available to you. Like I say, it's not a trading course. I did these because traders were asking me, what are you doing? I said, well, here, let me shoot you a picture. Some are actual trades, some are just screenshots. It's not, and some are experimental. Some of this, I work with developers at Bookmap, and this is going back to 2020, and they coded stuff up for me, and then some of the stuff got jettisoned. Um, but I think there might be something here. And if you're interested, go to the Bookmap Discord Trader Lab chat. There's a link in YouTube if you're interested in this. Download the PDF, say hi, introduce yourself. It's a great community. There's a lot of screenshots, circles, arrows, statistics, and tools that are available to you. And I have to tell you, the reality of the trading business is really different from the fantasy. And I recommend that if you're not getting where you want to go, that you maybe just see what else is available. There's a reason the retail traders have such a poor outcome statistically. It's because they all do the same thing, they all think the same way, and statistically, it doesn't work. If you ever have the opportunity to talk to long term career traders, you're going to learn a lot about what they do. And I can assure you, they are not doing what you do. Why? Because there's for every winner, there's a loser in the market. And if the retail trader failure rate is so high, where are those dollars going? They're not staying with the gamblers. They're crossing over to the house. The house trades with a statistical edge. The games that are played in the casinos are vetted, structured games. In the Trader Lab, it's about vetted, structured trades that have a statistical edge. And of course, past performance is not indicative of results. There's more to it, of course. But in a community, you can leverage the experience of everyone who's there. And I will say it might be an alternative if you're not satisfied with your current process. Thumb up, please, in YouTube. And by the way, I want to remind you all this stream is available exclusively to Bookmap Discord Trader Lab participants, and it'll be available through the weekend. And all my other streams are available for minimum 24 hours, and the library of webinars is available to everyone in the Bookmap Discord Trader Lab chat. And there's a primer webinar if you want a high-level overview of this. It's about an hour. It gives you the concept, what's behind this, why, and it also talks about the business of trading. If you can kind of get a global, higher level view of what the business of trading is, you might have, like many other traders have had, an aha. It's up to you. And I'm not saying this will work for you. It doesn't, nothing works for everybody because this is language. This is a foreign language. We use indicators to translate. All I've done is learn to speak the language. I don't need a translator. That's what this is about. If you're interested, visit the Trader Lab. There's a link in the bottom of YouTube. You don't have to be a Bookmap subscriber now, ever, never. You'll never be solicited, but I think it might help. It's up to you if you get some value from this. Thanks again, everyone. Have a pleasant weekend. Remember, our next target is down at that value area low, VAL, around 24. Let's see where we are here. And I appreciate you visiting the Trader Lab today. Hope you got something out of it. And again, none of these are trade recommendations. It's market mechanics. Hope you got something from this, and I hope you see how this process and approach might potentially give you an edge over other retail traders who don't understand how the market works. Thanks again, and have a great weekend.